All. I mean, well, let's see when it actually comes through. I mean, a central bank has a permission like that. UCO Bank has permission. There are a bunch of banks which need capital desperately. Well, they've got permission, but whether they'll be able to do it in the next, in several months, it's very difficult to say. Meanwhile, the market has gone seminally, emphatically below the 12,700 mark. 12,667 was the low it traded, and the Nifty is closing in on that 3850 mark. 3856 has been touched. That's 4.5% lower. The acid test is coming here whether 3850 will hold or not. Well, Rajat, what should a trader do at this juncture? We've got, what, about 10 minutes to trade. Best to get out, square off, book your losses?
Yeah, definitely, because this kind of a market, actually, the downside momentum is so strong. Whether there will be a pullback tomorrow morning is very difficult to tell, because bad news from across the Atlantic, there seems to be no end to that. So, I mean, it's better not. It would be better not to expect any kind of good news and pullback rally. So it would be better that if you get out of the current position. One statistical thing, Lata, here is that we have just for the first time broken the May 12th high, May 12, 2006 high in the Sensex, 12,671. Sensex, after posting a fresh high, always tested the earlier major high, and today is the day it is testing. So if at all any support is to come, it should come here, otherwise we might actually go much further down.
Mehraboon, for a fresh investor, for somebody who's coming in with a new set of capital, how would you advise a person to rebuild his portfolio or start afresh?
Well, it's a lovely question, I think, and it has to be addressed in the right way. I would put it this way, that honestly, most of the opinions given by all of us, including me, is basically because our vision has got completely blurred by the reversals. The portfolios of virtually everybody, there's no exception. We have all suffered over the last 6 months. I think if you look at the performance of anybody in this country or invested his money in stocks, I think, and that is, allow me to say, that is making us take a very, very, very negative view. I think not many amongst us are looking at the stock prices of individual stocks, which may look otherwise appealing, but we don't even bother to look at what is happening, because on the whole, our mood is completely negative. I think sentiment, couldn't have it gone further lower than what we are today. I think this could possibly be a crisis situation where definitely a new investor wanting to enter into the market, and I think there are not many around, unfortunately, at this point of time, but if somebody wants to enter, I won't stop him. The fact is, as I always mention, that there are always opportunities in every crisis, and there are opportunities. But allow me to state there are not many stocks in this market which really look appealing to me either. I think there are hardly 6 to 7 companies which are right now on our buy list, and we are looking at this present situation and the present valuations to buy into the market. We are trying to identify more stocks, but on the whole, coming back to your question in one line, I think yes, this is the time for a new investor to start looking into the market, but this is not trying to state that just buy across the board or just buy anything into this market. There are very, very few SPEFs in this market which according to me look appealing. They could be in the defensive sectors, you may say. There are companies in the IT product category, or some one or two names in the shipping sector, or maybe quite a few in the pharmaceutical sector, which according to me at the present valuations look very, very interesting to me.
Whatever you do, Mehraboon, do not use your credit card to buy anything. HDFC Bank has just upped the credit card charges. The loan already was very high. It used to be at about 2.75 to 2.9% per month. It has been hiked to 3.05 to 3.25% per month. Remember that. We're talking about per month charges, and that's obviously because of the high cost of money that HDFC Bank has raised credit card charges. Must expect more NPAs across the banking sector if credit card charges move up so much. They are anyway the place where a lot of bad loans are generated, and that was one of the weak points even in the Axis Bank results. Well, let's get you some market closing strategies, since we barely have a couple of minutes for markets to close. Rahul Mohinder advises to continue holding short positions in the Nifty with a target of 3790 and resistance at 3873. He feels that both ONGC and Tata Steel look weak, and one can create fresh short positions in these stocks. He does not hold these stocks.
And Vijay Bhimbani comes in with another closing strategy. He advises to go short if the Nifty spot closes below the 3850 level with a target of 3680. His disclosure is that he does not have any positions in the Nifty. Before we slip into a short break, one quick word, Rajat, on these stocks that are hitting their 52-week low, HDFC Bank and Maruti Suzuki. Play for further sell-off or play for a small-term bounce back?
See, as far as the banks are concerned, I would say that they are actually first they sacrificed their 2007 gains. Now they are on to sacrificing their 2006 gains. So perhaps you would see lower levels there. And auto stocks, as per my cycle studies, it would actually bottom out in 2009. Of course, I would love to see Mehraboon's rally happening because I am also, in my heart of hearts, a bull. But then it's too difficult to actually expect these counters to show a bounce back immediately.
All right, let's take a quick break, Rajat. We'll come back and look at the closing few minutes of the market, looking bad at this point.
Welcome back. A horrible, horrible day for the markets. We did breach the 3850 level to create a new 2008 low. On a closing basis, we may, however, close marginally above that 3850 level. But nonetheless, the cuts have been vicious. A lot of stocks by now would have shed 3/4 of their market cap from their peak, and therefore we've seen the banking space, the real estate space see vicious cuts. 7 to 8% is a norm in today's trading session, most of those counters. We're still joined by our two guests. Mehraboon, we'll end this session by just asking you, from the stocks that have been in the news of recent, the Ranbaxy or a SpiceJet, would you buy any of these stocks currently after the beating they've taken?
No, none of them. And I think I would like to make one thing very clear. In a powerful medium like CNBC, I think when my friend Rajat has possibly not understood what I'm trying to state, it's a very simple thing which I would like to convey, if you allow me to state that I am saying that these are not aberrations. I am saying these are macro factors which are really negative, which are therefore real, which nobody of us can allow how far it will go. So while I would not like to predict as to how much further we will fall, like I always say that nobody in this country can predict where we are going to fall further. What I am trying to state is when such type of things happen, there are always opportunities to surface in some individual scripts. And at this moment, I don't have more than 6 to 7 scripts where I feel I can go ahead and buy. And the other thing which I wanted to convey is at 19 and 20 and 21,000, there was hardly any bear around in this market who was ready to state go short in the market. And at 12,500 level, I'm quite sure there's not a single person amongst us is going to go ahead and say that this is the time to buy. So while I don't know as to how much further we'll fall, what I'm trying to state is even for a new investor, it's going to be very difficult to make a call because selecting scripts is not going to be easy, number one. Making money is going to be very difficult, at least for the next 6 months to even 1 year. So I'm not very hopeful as that. What I'm trying to state is this market always provides opportunities in very few select scripts, and not many amongst us, frankly, are mature enough to identify those few stocks which really provide a great opportunity at the moment, because we are just all the time discussing how much further we'll fall, how much further we'll fall, and there are individual steps which will come, give us an opportunity, and possibly much later we'll realize the opportunity had come our way and we had missed it.
Oh, absolutely. More than the levels, I guess it's the amount of patience that this market will demand from investors. Rajat, I don't know if this can be chartically even read, but what kind of a time limit or time level does this downturn look like? Does it look like a 12-month patch? Does it look like an 18-month patch? Can you read these at all?
See, as of now, I was earlier expecting a bottom around first week of July. Since that did not happen, another time frame would be somewhere around the third week of July. And I'm now looking at, if suppose for any reason, by any chance, elections are announced, then we might see a rally, because past instances suggest that elections have been taken positively by the market. At least a corrective rally tends to happen. But overall, if you ask me, this suggests that the bear market could be anywhere between 12 months to about 15 months, because the pace is so fast. So I do not expect it to continue for 18 months, maybe 12 to 15 months, pretty much likely.
Okay, Rajat, on that somber note, Mehraboon and Rajat, thanks much for joining us. We'll take a break. We'll come back with our in-house team and analyze what's been a dismal day on the bourses.